Ladies and gentlemen, welcome back to the channel. Tesla stock today was up about 5% in regular trading, up another 0.25% in after hours. And let me tell you right from the start of this video, there's a lot we have to get into. We have some Tesla news to go over, some huge economic data coming out tomorrow morning. A Fed governor spoke today in after hours that I think you should hear, especially some of the comments around the consumer maybe not accepting the higher levels of tariff inflation that they were previously expecting. Now, beyond that, we have some Tesla stock news as well, and I generally want to speak on what's next for Tesla. Okay, let's start here. We had deliveries this morning. Deliveries came in about 20,000, I would say 20 to 40,000 higher than most investors were expecting. About 20 to 40,000 higher than the stock was expecting, in other words. So what kind of dragged Tesla down today? And I know, again, the stock was up 5%. But what kind of put a damper on what could have been a larger day, is maybe a better way to word this, is the ongoing feud between Trump and Elon, okay? It's hanging over the stock like a black cloud. At any point, it could get worse and the stock could fall further. Now, if that situation gets resolved, then I think even from these delivery numbers, like the stock should have been up 10% today. So theoretically, if that gets resolved in 10 minutes from now, I think the stock's going to go up a lot. Okay, I think that is one thing that is holding Tesla back. The other thing holding Tesla back at this moment is analysts don't know what to expect for robotaxi next year. Because Wall Street is buying stocks, markets closed at new all-time highs, literally like closing almost at a new all-time high, here in after hours, hitting a new all-time high as we speak, okay? There's a lot of momentum out there. And Tesla just needs to provide some guidance on robotaxi and scalability. That's it, okay? That's what we're waiting for to send this stock into the 400s. And I think we get that clarity on scalability on earnings. And when we get that, it's going to fuel a much larger rally for Tesla. So I think it's far from over, okay? I think Tesla's going to be a $600 stock by the end of this year because of robotaxi, because of the scalability of robotaxi. That is what is going to set Tesla apart and really get the stock moving higher. Now, in the meantime, this stock can move higher if we get good economic data, let's say tomorrow morning, or, you know, something else positive happens. But that is the big, if I can use this, fireworks moment for Tesla, is when we get that guidance on scalability. Analysts don't know what to expect. For context, Waymo has 600 vehicles operating in America right now, doing autonomous robotaxi rides. What if Tesla says, hey, next year, we're going to have 2,000 robotaxis out on the road? That's great. Like, Tesla's going to dominate, okay? And we all already expect that. But what if Tesla says, hey, we're striving for as many as 50,000 robotaxis out on the road next year? What if Tesla says on their earnings that the robotaxi arm of FSD, which is different than the FSD we use to drive around daily, merges onto the main FSD line that we use daily in, let's say, 3 months? And then at that point, we can turn our cars into robotaxis. What if next year in 2026, we can turn our cars into robotaxis and we have tens of thousands of robotaxis feeding Tesla a portion of the robotaxi revenue that our vehicles are making? I mean, that would explode Tesla's profitability. That's why it's so critical to get the scalability guidance. It could be not a huge driver for Tesla next year, or it could be a massive driver for Tesla next year. Okay, what's the timeline on expected profitability? All of that. So that's why I'm calling it the fireworks catalyst for Tesla stock. And Trump, Elon beef or bad data. None of that is going to offset guidance on the scalability of robotaxi. That is going to be the holy grail of short-term catalyst for Tesla, regardless of what else happens in markets. But before we get into all of this information, I do not accept sponsorships for products that I don't use. Thus, I've never had a sponsorship on this channel. I turn down every single offer, some of which are crazy amounts of money. Like, you'd be shocked. Okay, I do that because that would be misleading of me. And that's never the idea. But what I will shout out is the trading community linked down below in the description of this video. What we are doing over there, long story short, is finding your small cap AI winners, okay? These are not short-term trades. These are 6, 12, 18, 24 month ideas where you have a small cap that hedge funds and institutions, a lot of them cannot invest in because they're too small. They're under their requirements, okay? And you don't have retail investors that have figured them out yet. So what I'm striving to do is be among the first to find these companies. And gosh, it's shocking the companies that are out there that I'm finding and investing in that are undiscovered. We've had 2 of them recently, one of which just announced a freaking buyout. It's going to be 2 to 3 times the size of the company right now. So that's already a big winner. And then we have another one that went up 50% like 7 days, 10 days after we first invested in it. And I just doubled down after the 50% rally. Like, that company is incredible. Literally nobody knows about it. Okay. That's where I think the best risk reward is right now in markets with the AI super cycle that I believe is coming. The hard part is nobody knows about them. So you have to go out and spend hours going through bad companies, bad small caps that you should never invest in to find the good ones that are far and few between. I do that for you every day. I have no life. I love doing this. I love looking at companies and digging into them. Okay. That is the unique service that we are providing. Not looking for 7%, rather 700% or 7,000% returns. Those are the kind of opportunities that I am searching for. And by doing so, you can, I believe, take on a lower risk profile. If you have a company, say $500 million market cap, that is projecting XYZ revenue, that is in the AI field with a large total addressable market, checks all the boxes, but just people don't know about it, that's trading at, let's say, a quarter of the value of SoundHound or Big Bear AI or, some of these other names that people just already know about. I think that is a less risky way to play the AI trade with far superior upside potential. My opinion, I'm not a financial advisor. I'm not a financial planner. Come check it out if you guys would like to. Link down below in the description of this video. We're already having stupid progress over there. Almost too quickly. So come join it. Link down below in the description of this video. But back to your regularly scheduled programming. Now, a Fox Business correspondent says, multiple trade sources are telling me that we could get an announcement of a tariff deal with India as early as tomorrow. I am told language on an India deal is being finalized today. There's one caveat. It's still fluid until Trump actually signs off on it. So today we got a trade deal with Vietnam. If we get a trade deal with India tomorrow, that's great, okay? Because the Southeast Asian region that does a lot of manufacturing, not super complex manufacturing a lot of the times, like clothes and bunch of other things like that, got hit really hard with tariffs. Like 70, 90% tariffs, 100+% tariffs on April 2nd was not uncommon for those Southeast Asian, countries. I consider India kind of in that region as well as Vietnam, Malaysia, Cambodia, right? So on and so forth. So getting deals done in that area is actually very important. Now, also some pretty interesting news for AI. It says OpenAI has agreed to rent a massive amount of computing power from Oracle, totaling about 4.5 gigawatts of data center power in the US. That amount of energy could power millions of American homes. I mean, if you didn't think AI was alive and well, I think that's telling you something. Now, markets are closed for trading on Friday, so that means we get the jobs report coming out tomorrow. Goldman sees the June jobs report, missing forecast. Goldman Sachs expects June U.S. payrolls to rise by 85,000, below the 110,000 consensus. They cite falling federal jobs, Trump's immigration clampdown, and tariffs hurting manufacturing. Goldman also sees unemployment ticking up to 4.3% from 4.24% in May. Now, we missed on the ADP employment report today. The Pulte guy, I'll just call him that, Pulte, I think it's the FAHA Housing Association. Basically, Pulte is the guy that oversees Fannie Mae and Freddie Mac, okay? Like, he's in the government. Calling for Congress to investigate Jerome Powell. That mixed with the ADP employment change suggests that maybe we are going to get a bad jobs report tomorrow. Like, what if Pulte already knows the jobs report? Like, a lot of people in government get these reports like ahead of time. What if the jobs report is really bad tomorrow? That could put a lot more pressure on the Fed to, one, begin the process of cutting rates, but also maybe to get Powell out of the top, chair on the Fed. I don't know if that would necessarily be good or bad for markets at this point. Like, theoretically, getting Powell out of there, getting more cuts would be good, but that would add to uncertainty. That would add to what could be volatility. So although I don't think there's like a huge chance that Powell gets kicked out of the Fed before his term ends May 2026, there is a chance that this does start a broader investigation into Powell. Okay, let me see if the camera's still on here. This freaking cat, dude, plays with the camera cords. Jose, you gotta stop. He's like chewing on them. One of these days he's gonna completely break the camera. So if it lights out one of these days and just doesn't come back, yeah, it's his fault. So tomorrow, again, non-farm payrolls last month were 139,000. So you're gonna get a revision to that, probably lower. The expectation tomorrow is 110,000, as we talked about. The unemployment rate is actually expected to rise from 4.2% to 4.3%. Then you have subcomponents here like average hourly earnings, all kinds of different subcomponents, but markets really care about those headline numbers. We also get exports and imports for May, and this will help feed into a new updated Atlanta Fed GDP Now tracker, which July 1st, we did get the latest update, and that is sitting at 2.5%. Now, keep in mind, Q1 GDP was, for the final number, down 0.5%, like in the negative. So if we start to see this GDP number come down, if some of the exports, imports numbers tomorrow are not good, if the jobs report is not good, participation rate is not great, then you could start slipping closer to another negative quarter of GDP and thus a technical recession. We had a technical recession in the first half of 2022, again, largely driven by imports and exports data. So keep that in mind. Now, tomorrow, you also get initial jobless claims expecting 240,000. This has been elevated for a while now. Part of the reason markets are growing a little concerned of what could be a growth scare over the next couple of months. Keep that in mind. That would obviously not be great, but really prompt the Fed to cut rates. And I think tomorrow's jobs report is really just critical for that. What could be July rate cut. We can see markets are currently pricing in around a 25% chance of a Fed cut July 30th. A 75% chance of a continued pause. But if that jobs report is bad tomorrow, you're going to start pricing in a higher chance of a cut coming July 30th. And you might sharply see Fed officials start to get a lot more dovish. Okay. Now, also tomorrow, you will get ISM services PMI. So Services PMIs were strong for a really long time. They went below 50 last month, which anything below 50 is contraction. Okay, so tomorrow's expectation is 50.5, would be back into positive territory. Last month was 49.9, so barely contraction, almost, not even like worthy of saying it was a contraction, but technically it was. And the services PMI is something Wall Street cares a lot about because the economy is about 20% manufacturing and 80% services. Okay, basically everything is services. So if you're going to go into a recession, it's going to be services driven. Manufacturing can definitely help or hurt things, but it's really the services when it comes down to it. Business activity, employment, new orders, and prices will be critical for tomorrow morning, especially prices. Prices have went up a lot recently, but really what this is, the ISM, it is a survey of managers in certain segments, like the services, right? So you could get surveyed from the manager of DoorDash, let's say, that says, hey, we see prices going up. Like, is that definitive? No, it's roughly opinion based. But we have seen prices in this component of the survey go up a lot in recent months, as you can see here, the small boxes, they're definitely going up quite a bit. Versus like new orders, employment, and business activity. So theoretically, you want to see employment, new orders, and business activity go up and prices come down. That would be the ideal situation, and the headline number to obviously come in higher versus lower. Now, tomorrow at 11 o'clock in the morning, following all of this data, you are going to get a speech from Fed Bostic. Fed Bostic tends to be one of the more, hawkish Fed members. He's not really a super dove like Bowman or Waller. So depending on the data tomorrow, if it comes in bad, I expect Fed Bostic is going to take more of a dovish approach. He's going to be open to the idea of cutting rates in July, things like that. If everything comes in good, then it's going to be a lot of the same old from Bostic. But I think tomorrow is actually going to be critically important for markets and whether or not we get that cut coming in July. Now, the percent of stocks trading above their 50-day moving average coming in today at 72.67%, up about a 0.5% today. The CNN Fear and Greed Index as well coming in at 63, which is actually down from yesterday's close of 65. So that's interesting. Market momentum is greed, stock price strength, extreme greed, stock price breadth, extreme greed, put and call options, extreme greed, market volatility is neutral, safe haven demand and greed, and junk bond demand currently in extreme fear. Now, the AI Investor Sentiment Survey, the AAII Investor Sentiment Survey, as it's really called, last week showed bullish investors at 35.1%, neutral investors at 24.7%, and bearish investors at 40.3%. So tomorrow we're going to get a new update to this as well. You want to see as many bears as possible. The more bears you have, the better for markets. Now, yet again today, the markets hit a new all-time high. The SPY approaching the 620 level. This is great. Okay, this is awesome. Great news. Okay, you've broken out. You've hit a new all-time high. 4 of the last 5 trading days. We called this out. I pretty much knew this was going to happen at some point. Okay, that's why I was so adamant on the channel saying, hey, this is not the time to fade this rally, not the time to fade this rally. Like, I see a lot of people that are bearish out there that are going to miss out when markets break out to new all-time highs. That's great, okay? You are now overbought on the RSI. That does not mean markets have to slow down just yet. It does mean eventually we will, okay? The RSI on the SPY is at 72.67. Now, what this is showing you is relative strength, okay? So it's relative, okay? Like, sure, this has been a pretty dramatic rally from the low of this market, but relative to the last 90 days or so, you're starting to break out, okay? You're starting to see a lot more upside momentum and less downside volatility. That's what this is really telling you. So I think we can move higher still. Again, I think we move into the 630s on the SPY before you see a little bit of a consolidation, a little bit of a slowdown. That, typically when the RSI gets to the 80s is when you want to play a little bit more defensively in the short term. Okay. Normally it's not in the low 70s. The low 70s tend to be a good level on the RSI for markets to continue to move higher. Once you get to the, again, 80, 81, 82 is when you want to maybe take a little bit of a breather. Okay. I think that could be another 1.5 to 2% ish on the S&P before you get to those extreme levels on the RSI and you see a little bit more of that consolidation. So I just wanted to point that out there because we have not been overbought on the RSI since really July of 2024. It's been a year since you've been overbought on the RSI, like above 70, which is kind of wild. I didn't even know that until I looked at the RSI on the SPY. Fascinating. So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel. And as I mentioned previously, if you guys want to come trade with us, come join something that is unique that you will not find anywhere else in terms of looking and seeking out those big winners before Wall Street even knows about them. I'm really not interested in I will be when the opportunities present themselves. I'm not interested in, finding these risky small caps that are bad companies that are, going up 50% on a headline. Like, sure, could those do well? Could you do well doing that? Of course. That's too much risk. I found with this strategy, finding these underlooked, underappreciated stocks that are great companies, just not really known yet, you can dramatically lower the suspected risk profile. So again, let me know your thoughts on all of this down below in the comment section. Have a great rest of your day, and I will see you in the next one. So again, as markets soar to new all-time highs here, even in after hours, hitting another new all-time high, in the 621 range. Keep in mind, I do think you will get a stalling out moment in the 630s on the SPY. Roughly another 1.5% upside from here could definitely make sense. The RSI is at 73. It normally starts to get a little toppy and cool off in the 81 to 83 range. We have not been overbought in the RSI since July of 2024. Also keep that in mind. And I think there's a lot of bears out there. We've seen this time and time and again represented in the AI Investor Sentiment Survey with more bearish investors than bullish investors every week besides 1 week for the last 3 months. Okay, there was a lot of bears out there. So effectively the last 12 weeks, you've only had 1 week where there's been more bullish investors than bearish investors. That is abnormal to say the very least. So there's a lot of bears. There's a lot of short positioning on this market. There's a lot of underinvesting or allocating in stocks right now. And as you hit new all-time highs, as I predicted would happen, the chase begins. And I think some of those short positions from a risk management perspective need to be reevaluated, and potentially you'll even start to see some shorts covering on the broader markets on the higher beta areas like Tesla. With a good delivery number today, I would not be at all surprised if Elon Trump tensions die down. We get guidance on scalability of robotaxi, let's say 10,000, 20,000 projected robotaxis out on the road next year, and you see one hell of a short squeeze in Tesla that could send the stock into the 500s. Don't count that out. Like, this is not the time to be counting out and doubting the AI area of this market. That's my view. Again, I'm not a financial advisor, but the way that I am investing my capital right now is very much risk on. It's very much, again, in small cap AI names. Obviously, I own all of all of the stocks that you guys do as well. I think Tesla offers a great balance of risk reward. Okay. But again, is Tesla going to 10x in the next 6 months? Probably not. Could it 2 to 3x? For sure. You know, could it 5x if things got crazy? Perhaps it could. But some of those small caps that are just under, you know, underappreciated, that's where I see a lot of opportunity as well. So yeah, I own all those other stocks, but I think that's where some big money could be made. If you guys, again, want to come trade with me live in real time, check out that link down below in the description of this video. And I think you could start to see a broader short squeeze in like the markets, as I think you could hit 700 by the end of this year, which again, at this point, like, is that even too crazy to ask for? You're up, that would be up 13% from here. I don't think that's crazy at all. As long as we avoid a recession, start to get some rate cuts, maybe kick Jerome Powell off the Fed, that would be a good start. Like, tax bill passes, geopolitical tensions die down, earnings come in stronger than expected, AI continuing to boom. Yeah, I don't think 13% is too much to ask for. Again, in that scenario, if all things go well for Tesla, which deliveries was a really damn good start, you're going to see a squeeze here. As I've talked about before, Tesla's short interest is the highest of any mega cap tech name in terms of the dollar amount sold short and the short interest of free float, sitting at 2.74% short interest of free float and over $23 billion sold short in Tesla, totaling about 77 million shares. Like, there's a lot of dry powder on the sidelines here. So let me know your thoughts on all of this down below in the comment section. Tesla up another almost 0.5% in after hours as well. So congratulations, ladies and gentlemen. We're just getting started. Have a great rest of your day, and I will see you in the next one.